Hey everybody, it's Jason. Time for the MoneyFlows show. Today we have a great guest, Mr. Fausto Pugliese. I met him at the Money Show fourth quarter last year, maybe October or something like that. We sat on a panel and man, I just thought you had so many interesting insights and the way you were trading and looking at setups. It really spoke to me. However, I'm like a long-term guy. You're a shorter-term trader. I just thought it'd be fun to have a difference of opinion, see how we overlap on markets, how our psychologies might align or differ, and just get into some effective ways to make money. Welcome, Fausto.
Well, Jason, thanks for having me. It was great talking on that podcast with the Money Show. I always like doing that because you always get different perspectives of people in the market. Like you trade more of a long-term trade. I do more short-term. Like you said, a little bit about myself. I'm one of the actual original day traders that started back in the early 90s. There was like a few thousand of us. Now there's over a few million people around the world that are doing it. And I just found my niche. I started as a broker, hated it, but I learned a lot that the people make the most money in the trading community is the trading department, and learned that most of the trading that goes on is basically day trading. What they're doing, they're just turning trades in and out. I was good with numbers. So I got into that industry. It's a long story, but don't need to bore everybody. You can always check out my bio if you want. But I've learned that it's such a big failure rate that we all have failed that I started one of the first schools in the industry, really felt like, you know, the same thing. We hate seeing people lose money, and, it's bad for the industry. Everybody looks at it as a bad thing, but it's really not. They look at the people that trade the stock market are bad people, but we're just like anyone else. We're just trying to make a day's pay. And that's one of the reasons why I loved coming on shows like yours and telling everybody that there is a better way. And the better way is you hear a little bit from everyone else with your style. You should go out there and get educated, because the main reason is people are not educated. And that's why we're here today, to kind of tell everybody what the difference of markets are and how we trade differently.
Totally. I had two things that came to mind when you said that, because I want to talk about your university in depth in a little bit. But before we get to that, there were a couple of concepts I wanted to cover. But you mentioned original day trader. So I used to have a book on my shelf called The So's Bandit.
Yep. Harvey Halpin.
The short order executions. Was that like you were in that original crew?
Yeah, so I was part of that whole crew. That was Harvey Halkin who wrote that book. He passed away not too long ago, but he was always on TV. I was so impressed about him. Joined that group of traders that he started. It was All Tech back in New Jersey. I was here on Long Island. And we were called the So's Bandits back then. And that's basically what it was. We used to use something called a So's execution, meant small order execution. That was the abbreviation of So's. It was a tool that NASDAQ gave us to execute. And once again, it's a long story. I even have a book too. It's called How to Beat Market Makers at Their Own Game. I go in real depth of what it was and how it started and how we evolved on how we trade today. But, we started some of the big ECNs back there, what you guys use today. How to become a market maker. But So's was just a tool that will allow us to become a market maker and make executions. It really pissed off the market makers because they didn't like it. It was like their private club. But once they had people like us accessing it, it's really just opened up the door. And that's where we are today.
Well, I think the big key here is that you are here today. Day trading was back in the 90s, if I'm not mistaken. To make it this long in the business and be independent and have successful businesses around your trading style means you're doing something right? There was an old axiom: there are old traders and there are bold traders, but there are no old bold traders, which means you clearly must have mastered risk management, how to exploit opportunities, and ultimately get edge in your favor. And I think that's what people should be interested in, right? It's not just the tools are great and the, quick execution and in and out, and even having capital is great. But if you don't know what to do with it, you're not going to last very long.
I'm glad you brought that up. I couldn't explain it any better than that, in a way that we've been through so many crashes, and I've seen so many people that have tried to step into this arena where they think they can educate. But like you said, it's all about money management. It's all about discipline. I will be the first one to tell you I was never a big trader because I was a conservative trader. When you try to get in too deep and you see these people make a lot of money, believe me, what they're doing is that they're constantly doubling down. Eventually, it doesn't work out. And you, being a long-term investor, know that. You got to know, most importantly, you got to learn how to lose before you learn how to make. That's what the biggest thing that I teach. I don't teach people how to make money, Jason. I teach them how to stop losing it. That's what you learn, and that's what you get hired for. They hired you because you think you're going to make money. So being around that long, been through so many catastrophes, like the internet bubble, like the Hurricane Sandy, 9/11, the financial crisis. Some of the people here are probably listening in, probably through the crisis of COVID. You got to know how to survive that to get to where you are today, because it has been a big challenge to be doing this for 35 years. But there's not a day I don't do it. I just love doing it. Even when I lose money, it's like, man, thank God I got out of that position, Jason, because my God, look where it is today. And then when I have one that runs on you, it's like, whatever. It's like that really good looking girlfriend, or I could have had, or that really rich.
The one that got away, the one that got away.
There's another one.
It's so true, because anyone starting out investing, probably the worst thing you could do is make money right out of the gate. And that gives you a very false sense of confidence, whether it's long-term investing or even short-term trading. You think you're invincible, and then when the invariable kick in the gut comes, it hurts 10 times worse. So that training, that learning how to react and manage your risk is so important. And that brings me to my next point. There's headline risk all over the place. And especially, love him or hate him, Donald Trump loves to dominate the news cycle. And I was just talking on a meeting a week and a half ago. The US basically staged a coup of Venezuela, and suddenly that's nowhere to be found in the headlines, because all he's talking about now is Greenland, right, which also overshadows the fact that a sitting Fed chair, Jerome Powell, will serve to subpoena. Like, those three headlines alone are crazy in any other given period of history. Right now, it's kind of like, oh, today's Tuesday, So I kind of wanted your perspective on, is this bluster? Is it distraction? Is there meat behind it? How does that affect the trader's mentality and even the stock investor's mentality?
You see, Jason, one thing that I've learned that will help you to become a very good short-term swing trader, investor, it all starts with day trading. And like you just mentioned, these headlines, it's like this president has to be one of the most polarizing, best things for traders in the industry, because it's making so much volatility. It's not like, Biden signed a whole new deal with Congress, with the Green New Deal, and we're going to get this. Every day is something that's going on. So as a day trader, when you see that happening, it sets you up. Now, is it a swing trade? Is it going to be a long-term trade? I mean, something new happens if it's, rare earth stocks that are moving, if it's nuclear stocks that are moving. I mean, the big thing, I've been doing a lot of videos recently with silver, if it was Bitcoin, it's just like every day is like a catastrophe or a rally. It's unbelievable. If you hate them or like them or love them, as a trader, being in this business for so long, there are just so many people. If they were biased, Goldman Sachs wouldn't still be around. BlackRock wouldn't still be around. Morgan Stanley, JP Morgan, they would not be around. They just got to know how to trade the market. We don't take things personal. This is a business. You have to treat it like a business. And I always tell them, what's the definition of business? It's making money. But if you trade against it, you're going to get burned. But it's been very fun. And get back to your other question. I thought it was an excellent question about people getting lucky in the beginning. That happened, Jason, during COVID. A lot of people were sitting at home.
GameStop.
Yeah, this is great. Everything's going up. And like if you were some of us that were in it earlier, like some of us, if you weren't disciplined like us and knew when to get out, we were trying to catch a falling knife. But some people that got in from nowhere, they got all this COVID money, they made money. You won't believe how many of those people I've trained a year, 2 years later, and I don't understand, Fausto, I was making money back then. It's just not easy. I don't know what's going on. What am I doing wrong? So that is a very good point. That's like the worst thing could happen to you, Jason, is making money in the beginning.
Yeah, I totally agree. They say we're going to fill the Wall Street axioms, better to be lucky than smart, right? Sometimes I remember one time we were on a trade. So I ran derivatives, and we would put together these massive derivatives trades. And one of our clients put on a biotech options trade, and biotech is some of the most volatile sector you could have. He forgot to hedge and went to lunch, and some announcement came out and the thing spiked. And because he forgot to hedge, he actually made a boatload of money quickly hedged his position and was kind of done for the year for his book. And it was like, wow, better to be lucky than smart, But the point about volatility in biotech is you just mentioned something to a day trader. And honestly, even to a long-term investor, even though it may not feel that way for some people out there just managing their retirement accounts or whatever, volatility is actually your friend. And many people hear the word volatility, they feel like they've just been on a roller coaster. They look up today, the market was, NASDAQ was down almost 2% pre-market. Now we're intraday a little bit higher, but volatility, what that means is for people who are scared and don't know how to prepare for it, it means peril. It means violence to my portfolio. But to people, to a day trader, you're not going to buy low and sell high if there's zero price volatility, right? If the price goes nowhere, there's nothing to do. So volatility brings about opportunities, and it's about having that trained mind to recognize those and exploit those. So that speaks to you. How do you profit in general? How do you exploit these headline? You wake up in the morning, the market's down 2%. Is Fausto thinking, oh boy, I got to shift? No, you're flat and you're coming in. You're like, where are my opportunities? Probably things bouncing to the upside. I want you to speak a little bit about how you measure up opportunities. And then after that, I want to sort of get into how you look at certain stocks and maybe look at more quantitative or qualitative factors that help you increase your margin of safety on trades. So we're kind of going in a progression.
Well, Jason, just to let you know, I do also swing trade. I do invest. I mean, I do manage my IRAs. I manage family members' IRAs. So I do come in the morning. I do get a little nervous sometimes if I do see the market like today. I started there are positions right now that I was long, that I was a little concerned about, brand name stocks like the NVIDIA trades and like silver and all that. But, one leads to another. But the way how you get into them is they start as a day trade. And we'll be happy to show you if you watch some, I do a lot of shorts. I like doing short videos on social media. And some people's like, how did you know that silver was moving? It's just all of a sudden you'll start seeing volatility. Like you said, volatility is not a bad thing. Some of these stocks have been dead forever. And then all of a sudden, out of nowhere, things start picking up. Now, where volatility gets nervous for a day trader, which leads into a swing trade, it depends how fast it goes up. If it goes up way too fast, that's when you got to get nervous, because we have stocks like today that are up about 200-300% on a day trade. Mm-hmm. Now, people can't even make that in a lifetime. You make it in one day. So that's where volatility, you got to be careful, because, listen, I didn't expect the stock to go up that much. Can't go broke taking a profit,
Right.
Eventually they come down. I mean, some of them are short squeezes. That's something that you learn. But the way you learn is by seeing it. But day trading, I think everyone here has to understand. You got to understand the concept of it. You're going to use it. You're going to need it. It's going to help you to trickle into your investments and swing trades.
Yeah. So you just said something was really interesting to me, because how do you get into a position? It starts as a day trade. How I get into a position is MoneyFlows. We have a whole ethos. I talk to you through the whole process. We basically rank all these stocks. We look for the best stocks, seeing MoneyFlows, and that increases our probability of a higher probability trade outperforming benchmarks. And that's what we've done. We have a 35-year data history. But that also often flies in the face of maybe what a day trader is doing, trying to buy cheap and sell high. I'm just buying into the trend sometimes. My partner, Lucas, loves to buy on pullbacks. Everybody has their metrics. But what I'm interested in is if you have an interesting day trade setup, and say it's on a higher quality stock that could turn into an investment, I'd love you to walk me through what something like that looks like. Maybe we can even look up the stock in the MoneyFlows portal, but I'd love you to maybe share your screen, say this is what a Fausto cool setup looks like. I'd love to peek into your world a little bit.
To kind of tell you how I was taught how to trade, and this is something that anyone here, even you, Jason, would appreciate. You're probably doing it right now. You probably even know it. But I do a lot of education for, I do a lot of events for NASDAQ. I'm going to bring something up that everyone here can get access to. You can get it right through NASDAQ. Actually, some brokerage firms do offer it. It's called NASDAQ Total View. Let me share this with you, and I'll show you what the style, how we teach people, and how we know, even as a swing trade, you'll be able to see this. This is actually NASDAQ Total View. Everyone here can get it. Okay. And basically what you're seeing here is this. You're seeing every buyer out there.
It's like the order book that we're
Yeah,
looking at. Oh,
it's the
amazing.
order book.
Okay.
So we're looking at NASDAQ, and we're looking at every single order in the entire world that is looking to buy and sell NVIDIA. And this is like having a seat on the exchange. Now, a long time ago, when I first got started, I had to pay over $1,000 a month for this. Now you get up for like $15. Some brokerage firms even give it to you for free. But what you're looking at right here is we're seeing every buyer in NVIDIA and every seller in NVIDIA. Now, how do stocks go up and go down? Buyers and sellers.
Right.
So as a trader, what we're looking for is big block orders. Now, what's confusing about this is that you see so many numbers, everybody's like, well, what am I looking at? You're looking at shares and the price. What we're looking at is we're looking for big block orders out here. Now, on this stock right here, NVIDIA, there was a pretty big order.
25,000.
Yeah, let me show everything on the 500 shares and higher. So you could filter this out. Now what you're seeing right here is you can see there's like a 24,000 share buyer at 149, 14,000 at 180. Let me pause this. Okay, so it stops moving. And on the sell side, you could see like 180. You could see a big seller. Let me make this a little bit even higher. I like to look at anything above 1,000 and to filter things out a little bit more. I can see deeper depth.
So the deeper down you go, the further away from the trading price you get, right?
We'll look at 120 levels. So if I go down like here, you see like 64,000 at 182.
That's way up high. Right?
Yeah. But look, 185, 81,000.
Yeah.
There's almost 600 orders out there. And if you look over here on the left, 177 is 69. Yeah. So I want you to write this down.
76.
177.
And look down below, another 56,000 shares at 156.
Yeah, you got 50,000 for almost 1,400 shares at 176. So between 177, 176, you're talking close to probably about 150,000. Now check this out. This is how we trade in the market. So I'm going to bring up the video here, and I'm going to bring in this long-term chart. Now, if I draw a trend line, we said right around 177 and 176.
Yep.
Right, there's 175. Look at the long-term chart. Do you notice that like every time it's almost like a lot of support levels, big support levels back in September. You know, you're seeing these little valleys, but right here back in December, you see a lot of support levels there, right around that same number. And we said 188, 185. There was a big order out there. If I draw a trend line right there, 185, you know, you're looking at the long term. So you can't not only apply this to the short term, you can apply it towards the long term too. And you can look at it and be like, well, now I can see why program trading is kicking in. Back here in August, there was a lot of resistance levels here, 184.50. You can see a lot of resistance. That's probably that same order that's sitting there right there at 185. And that's basically how we kind of have a little bit of game plan. Now, how do we apply it towards a day trade? Is this.
Basically, those orders frame the channel, and people are just waiting for people to either get really greedy or really fearful to fill their order, right?
Yeah. And for somebody like you, Jason, that loves technology, I'll even show you something even better. This is something you all can get, but this is something a little bit different. This is a heat map, and this is NVIDIA. And you could see that 180 order out there that was there around 12:30, he got filled. You see it right there? You see how it got like dark red and light red and darker, and then it turned red? That red ball means that order, he's not there anymore because it got executed. So this is kind of showing you a little bit of the left of the chart. See, the right over here is the right of the chart. These are the orders. By the way, they're that 179 that we called out earlier. It's actually, there's 200,000 shares. This is aggregating not just NASDAQ, but there are other ECNs like EDGX, Archipelago, other ECNs. So it's adding, this is a little bit more of a different tool.
For the layman out there, explain ECN, just so they know what you're talking about.
An ECN, just to let you know, is a electronic communication network. We said 179, right? Here's 179, 20,000, 18,000. That order right there, which is exactly 179. Yeah, you see it right there? See it right there? 140,000 shares. So that's aggregated with two different companies. So it's probably GDGX and NASDAQ, that equivalence there. So it's got two orders here. But you could see like 179 is a pretty big support levels. So you could use two different tools. So as a trader, this is how we basically trade. How do you know a stock's going to break a support level, Jason, right?
Yeah.
Buyer gets executed. What happens if a big buyer gets executed and there's nobody there to support it? Where's it going to go? To the next biggest buyer. So the thing that we kind of teach at Cyber Trading University is we teach you where the orders are, which we call iceberg orders, which are big block orders, and knowing where you are, having that game plan, which a lot of people don't understand. You see, a lot of people like to read what's called the left of the chart. We teach something called the right of the chart, where you get to see the orders in the future, not in the past. And that's how it was trained. By the way, this technology you see right here has been around for 50 years.
Look at that. That guy got filled on that big red balloon. Stock's been essentially trading up ever since. So somebody dumped, how many shares is that? You could tell me 20.
If I zoom in, I could tell you what it was then. It was 300,000 shares.
Yeah, 300,000 shares. That's almost $50 million worth of stock.
Exactly.
So that's
so
a chunky.
When you're telling somebody, you think you know more than the guy who's got 300,000 shares, I don't think so.
Yeah. But to be fair, it's also two ways, right? Someone was buying, someone was dumping. What ultimately matters, and I'm sure for you, is how the trend's developing. And that's really fascinating. I want to jump over in a minute. I want you to finish
doing Bitcoin too.
Yeah.
Bitcoin, there are orders out there. This morning, I don't know if anybody trades Bitcoin, but there was a huge buyer of Bitcoin right around 90,000. You could see how it basically came down to its holding. You could do this on any stock. The thing that I kind of favor, just to let everybody know, you could do this on brand name stocks, but I, as a day trader, preferably like to focus on stocks that are a lot more expensive, less risk, more reward. Mm-hmm. But if you're a long-term trader, you can apply this to long-term. You can apply it towards also finding them on very inexpensive stocks.
That's so cool. It had me thinking, going back to the headline risk stuff. When we look at that chart of NVIDIA again, and we're looking intraday, and this is probably the biggest bellwether stock out there. And you see those big orders get filled. Can we look at that balloon thing again? That was cool.
The balloon, I'll move this over here so you can see it right here. Let me bring up NVIDIA. There's that big balloon.
So the big balloon, so this big bellwether stock is going up, and it's such a high weight in the S&P and in the NASDAQ that as it goes up, typically markets go up. And we saw intraday, that was, I think I looked up this morning, NASDAQ was down about 190 basis points. Last I checked, my screens just froze. It was down 130. So the trend has been intraday buying. And that to me points to what I was talking about earlier. We staged a coup. We took over, we booted Maduro. He's sitting in Brooklyn waiting a hearing. It's just crazy. It's almost the stuff of like an Harrison Ford president action movie. But that happened a week and a half ago. Nobody's talking about it now because it's Greenland. So one could think, Trump might be installing his oil buddies in Venezuela to set them up for riches and all that stuff. But the bottom line is you have to treat these headlines with a certain amount of incredulity. And we know, historically speaking, going back since 1990, that markets are in a major bull mode. So I'm going to share my screen real quick, and then we're going to jump back to you. I want to look at NVIDIA through the eyes of MoneyFlows because we're looking on a longer term. Fausto's looking day to day. If you're looking at my chart, this is NVIDIA here. We had a couple of outflow signals here, which means people were getting out in December. Now, why is that interesting to me? Because if we go back to 2020, if we take away these inflow signals, you'll see typically these red bars line up with great entry opportunities. Now, this was a difficult period in 2022, but when you have a stock that is firing on all cylinders fundamentally, like an NVIDIA, and how do we check that up here? We have our fundamental score, 79.2. And what does that look like? Well, we just scroll down to the fundamentals. Look at the sales growth, 1 in 3 years, earnings growth, 1 in 3 years, massive profit margin, very low debt. The PE is a little elevated because everybody wants to own it. It's a $4.5 trillion company, certainly less risky. This is a brand name stock like you were talking about. But you can quickly assess, hey, if I get in for a quick day trade or even a swing trade, could this become a core holding after a while, and you're going to have a much higher probability of stocks with great fundamentals. So it's a good way to screen and sort of look at that. Also up here, as I told you last time, these are the top 20 occurrences. So out of 5,500 stocks a week, we look at all of them that see unusual inflow signals or outflow signals like these green or reds, and then we rank them. And when you're in the top 20 seeing inflows, you appear in this report. And why is that special? Because the first time this ever appeared on the Outliers report was sometime in 2000. So it's totally skewed, but the stock's up 72,000% since then. We're all about increasing our odds for the long term. You're all about increasing your odds for the short term. It really brings about an interesting way to sort of layer that and look at it.
The thing, Jason, what you mentioned is this is the problem is that you're talking about something that happened. People want to find the next NVIDIA, right? NVIDIA hasn't really gone anywhere in the past 3-4 months. When you really think about it, there have been so many more stocks that you haven't not really been to hear about that are like an NVIDIA, which I would love you to share and kind of show these people. But we've been also, forget about silver. Silver is in a different league. I mean, as in like more of a commodity and whatever it is. But there are stocks today in the past 2 months that have gone up over 1,000%, brand name stocks. I'll let you know one of them, SanDisk. SN.
Yeah. It's the memory shortage. Everyone's going nuts for memory. Yeah.
So now, how do we find these stocks as day traders? People are like, well, I heard about it. Where is it now? I mean, if you look at stocks like SanDisk, I mean, this stock in August was at $44. It's at $450 now. Okay. So could it be the next NVIDIA? I look at Micron Technology. Now, as a day trader,
look at that chart.
Yeah. Just like, like they're just, so you don't have to be always married to something. Now, the question is, am I chasing it, whatever? Well, that's where day trading comes in because we get to see the order flow. Are these sellers that are trying to get out? Is it a short squeeze? Are they still selling it? That's where the NASDAQ total view comes in handy for some of you beginners, just to sample it out, just to kind of see, well, are there people still buying it? Are people still selling it? The only way you're going to know is you got to have a seat on the exchange, which you all have. And that's where that data comes into play. But yeah, I mean, you could look at it. These things just have been just nuts. Even like today, like SanDisk is up another $34.
Yeah, it's amazing.
Yeah, it's even more amazing about this stock. I don't know if it's a short squeeze, but there are sellers right now that are trying to get out that are selling it around at 450 right now. There's about 25,000 shares, so on. I'm telling you, Jason, I don't see anybody up until past 500. I mean, that's where the orders are. Like that's how you kind of people like, well, where do you think the next resistance level is? You could look at any chart you look at right now. There isn't any. You just broke through the roof. So people are like, how do you know where the roof is?
Brings about a key point for me from a longer term perspective. I'm looking at SanDisk. Has very solid 1 year, 3 year sales growth, estimated 1 year earnings growth at 84.5%. That's really where all this squeeze is coming from.
Right.
3 year earnings growth, they haven't really gone anywhere. Historically looking, profit margin, they don't make money. So everyone's piling in because there's a memory shortage. So it's not Micron, more of the chip manufacturer, right? Semiconductor manufacturing. So it's not really comparing apples to apples, but just looking on a fundamental basis. You get a higher margin of safety here with stellar 1 and 3 year sales and earnings growth, excellent 1 year estimated earnings growth, estimated 3 year earnings growth, massive profit margin, gross margins at almost 23%, hardly any debt. All that's baked into this fundamental score, 79.2. And if I look at SanDisk, SNDK is 54.2.
That's why I would look at it as more of a short squeeze because it went up so much. Micron also been having a huge monster. Same thing, monsters, 6 months. I mean, that thing was at 100. It's already at, I mean, you go back as far as I do. I mean, I remember Micron always would trade like 20, 80, 20, 80, 20. Damn thing's almost at 400 now. You know what I mean? It was just at 100. It broke through the roof, and but you obviously have a good score on it. There's another one that's also I mentioned Western Digital is another one that's in the same industry. I'm curious what the score you have on that one.
What is? It's not WD. It's WDC. Yeah. The score is 58
So,
fundamental, but look at that. Technical is really high. That thing, without looking at a chart, I can tell you what it's going to look like. It's going to look like the same thing, right? We call that the stairway to heaven. You get these green signals, which is just huge institutional volume lifting the share price higher. Recently, it became a top 20 name, but the fundamentals have a little bit of work to do, in my opinion. It does make money. It's got a lot of debt. But again, the big squeeze right now is in the forward. Everybody's
right.
pricing in this massive shortage of memory and semiconductor components. Therefore, there's this massive squeeze. Me personally, I kind of feel like it's kind of like getting married. There are plenty of fish in the sea. When you're young, you date and you try everything out. But when you're committing long term, I want to know from an investment standpoint that this stock's going to take care of me, right? If it's growing earnings, growing sales, so I'm a big growth investor, all those things. But I think it's really interesting how we can layer the two approaches to sort of maybe day trade your way into the next NVIDIA. That's kind of a cool concept,
It's nice because with your concept, and I remember you showed me last time your platform how it works. It's great because you'll see some of these stocks like, well, how does it turn into an investment? You know what I mean? So we're like the Marines, you're like the Air Force. You know what I'm saying? So it's like,
boots on the ground, view from the sky. I like that.
yeah, if you come in first and we tell you what's going on, and like, okay, we'll take care of it from here.
Then we just bomb the crap out of everybody.
Bomb the crap. We can't do what you could do, but you know what? You're not going to know where to bomb unless we come in first and see as the Marines. And that's where day trading comes like a big factor. There's nothing to be scared about. There's always people think it's a bad word, a negative word when it comes to it. But I just think people just don't know the concept. And just to kind of clarify so everybody knows, day trading means you're in and out the same day. That's why they call it day trading. Okay. So
you go to sleep at night with no positions.
No positions.
So that when you wake up and we're taking over Greenland and the market's down, you're like, fine, fresh new approach. Where's my opportunity today? And that's something I really respect and like about day trading, because I've had humongous P&L swings, which are very uncomfortable to sit through when you're long and strong for a long time. I wanted to ask you a couple more questions, and then I want you to tell us about Cyber Trading University. Technicals and momentum. So we went over the order book. We went over looking at that channel, how the order book might even outline a channel for you of support and resistance. What are some other technicals you're using looking for your setups, and how does that affect your outlook? Because I do think there's a lot of synergy. I also want you to address how fundamentals factor into your decision-making too.
Yeah, so there's something that we teach is called the 3 T's: tradable, trend, and trap. So the first T is obviously, about 50% of the failure rate. It's understanding the spreads. A lot of people don't understand what the bid and offer is. Just because you see a buyer and a seller doesn't mean you're going to get it. Some spreads are very wide. You're always going into a position you're going to lose because, if the spread's too big, if you're wrong, you got to sell it. You could have a stock that could be a penny wide. You have a stock that be 50 cent wide. 50 cents on 1,000 shares is $500. At the end of the year, that's $130,000 trade, when you're losing. That's how we kind of look at it, because traders like us, we trade. We don't sit there and do 2 trades a month. We do maybe 10, maybe some do 20, 30, 50 trades a day. So spreads are very important that come into it. So that's something that comes into factor. There's a lot of stocks that are moving today. I could show you. You could see them on your end, but I would say, yeah, that's great, but that's not something I would trade. It's moving way too fast. Every candlestick is about $1, just like you're playing like Russian roulette. So that really comes into factor. But our main goal is we kind of focus specifically on the big percentage gainers. That's how we kind of find these stocks. I get people that message me all the time, like, how did you know this stock was moving? And now they're talking about on TV. I don't have a crystal ball. I'm not a genius. If something's moving, it's going to show up in the big percentage gainers. That will trickle into a basket of other stocks that will follow along. If it was obviously not too long ago, talking about the Trump effect, he was talking about pot stocks, about unregulating pots. People were like, how'd you find TLRY? I mean, there was other stocks out there. There's like 10 different pot stocks. That was a good run for about 3-4 days. But we work off the big percentage gainers. We teach you how to scan which one they're going to give the least amount of risk with the high amount of reward. And then from there, then we just see where the order flow is, because we obviously want to just know where the street is putting their limit orders the program tradings, the algorithms, the high frequency trades, and then just focus on your day's pay, and that's it. So that's really the strategy, how we kind of focus on.
Do you work fundamentals in at all, or are you really just looking at technical setups, day trades? It's really price action, etc. Do you have any sort of baseline requirements that says this stock is toxic, I want nothing to do with it, even if it's going up today, or are you agnostic?
Toxic would be like something that is way too volatile. We have something we teach from category 1 to 5, where 1 means you're risking maybe $10 to $20 a trade. 4 or 5 means $500 to $1,000 a minute. You know what I mean? So yes, those are toxic. The next thing I think you mentioned, asking me about technicals. As a day trader, technicals, we do not use them. For one reason, they're laggers. By the time an indicator kicks in, it's going to be too late. It works for investing, it works for long-term trading, it works for a little bit short-term swing trading. But as a day trader, you can't work on them because you're always falling behind. The only indicator we use is order flow. We just follow all the orders out there, and that's called the right of the chart. But that's, like I said, that's specifically day trade. And listen, if you look at any, like if you get a picture of the New York Stock Exchange and you see the people on the floor, if you just go, what you want to look at the screens up there, their laptop, they're looking at just orders. That's all they're looking at. There are thousands of indicators, Jason, out there. Thousands. I mean, like, everyone's like, well, how do I know your indicator is better than him? Everyone's always invented an indicator, and then people read things different than others. And it all just makes perfect sense. It's almost like a guarantee, but like anything else, by the time the indicator kicked in, it's usually too late for us traders, day traders. That's why we don't use them.
Well, it's really cool because what you're saying is, and I think maybe some people watching are like, how is day trading related to MoneyFlows? Like, MoneyFlows is looking for the next NVIDIA, and that's what our whole system is geared to find. But you don't get returns like that in one day. It's difficult. Right. But it makes me think of, I was a bit of a math nerd. I like fractals. There was a mathematician, Mandelbrot, and he explained the world through geometrical fractals, which are like little equations that the best way to explain it is that the beach, the coastline, when you zoom out from an airplane, it's going to have the same gullies and scoops that you would if you zoom in an inch away from where the water meets the shore, because nature repeats itself. So I see an overlap. You're looking at flows, order flows, money flow. That is what dictates your decision making on an intraday basis. And all we're looking at money flows is following the flows. If there's massive flows of money into a stock and it outpaces the supply, and the fundamentals line up, and you're sitting at a poker table and you get dealt pocket aces, you play them. You may lose, right? Somebody can come with a royal flush and kill you, and it sucks. But if you keep playing by putting the odds in your favor over and over and over again, you've been at this for 30 plus years. I've been at this for a long time, and that's how you do it. It's not just about getting the white whale. It's about bringing in fish every single day, whether you do it short-term day trading or long-term investing.
I did a video. I did a pretty cool trade not too long ago, about 2 weeks ago, on OKLO, nuclear stocks. And there was a huge support level. The stock had a huge run up back in September, 75, ran to 200. Obviously, nuclear stocks, obviously with the whole AI and everything. So the stock came all the way down to 75, okay? And getting back to order flow, there was a big order that's been sitting there for a while. Now, getting to your metaphor that I kind of use too, playing blackjack, let's just say you got 2 aces. You've been doing this for a long time. You're sitting there patient, playing $10 hands. I hate to use gambling, but let's be honest, a lot of us probably do and don't want to admit it, but let's just say we use blackjack. You're doing this for a long time. You're playing. All of a sudden, the dealer's showing 6 and you just got 2 aces, okay? What do? Still play $10 hands? Oh, yeah, I'll hit. No, you split them and you go all in. And then you know what? This is a funny story. This actually happened to me. I doubled down. Boom, I got another ace. Double down. I had 4 aces, okay? So, here I am just making a day's pay. I made it all in one shot. So like OKLO, as what you learn is you're sitting there, you're pacing yourself, you're trading, you're making your day's pay, but there comes a point in time where you're like, oh my God, this is really it. Well, OKLO had this 500,000 share buyer out there on the bid. He was not leaving. He was there. And you saw the order clear as day, Jason. I'm like, you know what? Something's fishy going on. I went all in on a position. I bought more than I usually would. And what happened? News came out within 2 days, 3 days later. They signed a huge deal with Meta.
Yeah,
that they're going to do their contract, and the stock opened up like 14, 15% higher.
up
Now
away.
another thing that we teach you here is like I didn't own OKLO. I own OKLL, which was the ETF. A lot of people don't know that some of these stocks have probably 20, 30 ETFs out there with less risk, with more reward, but there's also risk on them. So I hedged myself and said, I'm not going to trade that. I trade the other one. And I did really, really well. What was great about that lesson, if you guys get a chance to watch that short video I did, I was up about 30,000 on that trade. I ended up closing out that position. I only ended up making 20 because, I thought it was going to creep up, and it got very volatile and started going down. If I didn't take that 20,000, I would have broke even. And how many times people make that mistake, Jason, right?
Pigs get fat, right? Hogs get slaughtered.
All the time. That was just recently, like a week ago, that happened. But this is what you learn as a trader, like to share with people with them, because they've all been there, they've all done it, and they want to know how they can hold a profit without giving it away, and how to take a loss and not before it gets worse. And that's where a lot of day trading does come into effect, because you could wake up one morning, Jason, and be like, oh my God, what do I do? What the hell's going on? Stock just got crushed. What do I get out? Let me tell you something. There's sometimes better taking that loss then, because I've seen some stocks I could show you that if you didn't take it now, you come back 2 days, 3 days later, it's like almost like 80% lower.
Yeah, it definitely happens. And again, from my perspective, the margin of safety is when you have a strong growing company. And it might take a year in my cases. And for you don't have that luxury of time. I'm going to share my screen. We're going to go over a couple more stocks, and then I want you to tell everyone where they can find you. What I've noticed, and I'm sure you've seen it in your trading, is that semiconductors have been on fire this whole year. We just talked about the memory. We talked about chips. AI is back in focus after in November they said it was over. It's just all, you really got to know what you're looking at in the news. But if we go over here in the MoneyFlows portal, we can see since January 1st, these are the flows every single day. So, what we can see here is a lot of money moving into industrials, healthcare, financials, and over here, technology. There's a rotation. There's money moving out of software stocks and into semiconductor stocks. But if we're focused, we can look at just the technology sector here, and we can see which stocks are better for people attracting inflows. Stocks up here, like there it is, Micron, right? ACMR Research. We got a couple other tickers in here. Those are repeated instances of ACMR seeing flows day after day. But if we look down here on a day-by-day basis, we can see the top-ranked stocks seeing inflows. And these are where, I would begin to do research. Micron, we just went over, APH, Amphenol, KLAC, they make semiconductors. Lam Research is a stock I've been long for a very long time. Here you can see what those flows look like.
Yeah, those are flying. I'm looking at I'm checking them all out as you're bringing them up. Those things have just been breaking all-time highs.
Yeah, and this is where you can really see what the flows do to dictate to price. Now, again, there might be some that maybe don't deserve it. UCTT, ultra clean. It's got a 54 fundamental. Or even look at here, TTMI. Let's just look at that one.
And MTSI took off. That thing went from 160 to 226 in like a week.
Yeah, let's look at that. MTSI, boom. Maybe there was an earnings catalyst, an upgrade. There was something massive in there. This stock's got a 62.5 fundamental. So decent sales and earnings growth. poor 3-year sales. They don't make money. I generally don't like buying stocks that don't make money. But let's look at another example. So this stock is even worse fundamentally. Fifth Technologies, nothing against them. I don't know what they do. Similar chart profile, just an explosion from 67 to 100.
Yep.
I mean, a massive move up. Sales and earnings growth, pretty ho-hum. They eke out a profit margin. They're pretty heavily in debt. You know, I think there are safer plays, but it just goes to show an example that, you know, a rising tide lifts all boats. But that's sort of how we look at it on the daily flow side for opportunities. So where can we find out about cyber trading and what you do? And
I'll just share my website really quick. We have a live trading room we run all day, and I will basically share it with you right here.
That handsome guy.
I got to change that picture. My wife said, well, you don't look like that anymore. You like twice as heavy, and you're like, that's like 10 years ago.
Like I look like how I want to look like, and that's that.
So this is our professional trading room. We got close to 200 people day trading in there right now. People from all over the world. You can see here on the left-hand side. And our instructors in there. We have live audio that goes on. We have alerts that we'll talk about companies come out, earnings that are coming out that we're looking at, which is great. I love your platform so much, Jason, because it definitely goes side by side. It's nice that you're able to find those great fundamentals. And then what I like about using it on my end is that it gives you great ideas. And then like, well, let me see, am I too late to get in? Let me see if the people are still buying it. So that's what's great about it. So you're all pretty much invited to come. If you click where it says join the live course, here's a video of me at the NASDAQ Center. I'm there frequently. I do talk about their order book, show a lot of examples. If anyone's interested, I got 2 videos that I'll show you where to get it and download it. I'm not going to tell you where to get on their website because you'll probably do more harm than good. So you could just email me at fausto@ctucorp.com and get you registered for it. But just come join the live free training course. If you click there, and we got an event we do once a week. Just put your name, email, and I do a whole presentation about how to get it, where to get it, and so on. Listen, I'm not looking to change anyone's style. You could apply this to yours, swing trading, day trading, options, especially the options. It really does help out a lot because you could see where those orders are. But once you understand the concept of it, then you'll know what the real truth is, why people fail in it and why you should need it. And that's why you'll succeed.
I love it. This was awesome. Thanks for spending this time. It's fun to investigate a clashing of styles to see where the overlaps are and what the common themes are to make money. I really appreciate you being here, and I want to do it again.
Jason, thanks for having me, and thanks everybody for listening. Listen, it's great what you're doing. It's important that people have to listen to these events and listen to people have been doing for a long time. Just be very careful, everyone that's out there. There's a lot of what I like to call influencers in this industry. Let's just say, Jason, they never been through the rough times. They haven't been through the ringer for a long time. And that's really what you want to look for. Find someone that's been around for a while, just like us, sample a couple of different classes out there and see what works for you. But just don't go out there and try to do on your own. It is a very big failure rate.
Keep your losses low in the beginning. Fausto, thanks so much for coming. I appreciate it. We'll definitely be having you again. I look forward to talking again soon.
Thanks, Jason.
Take care, everybody.